Welcome to another episode of the Bank Free Blueprint. Today I have with me George Flint. Welcome, George.
Thank you very much, Tom.
Yeah, so George, you are with Triumph Capital Partners, and you do basically like hard money lending, a lot of first position loans, that type of thing. Could you share just a little bit of how you got involved in this business and maybe describe just briefly what your focus is in business?
Yeah, definitely. So I started in the hard money lending business 6 years ago. Dove into it head first, learned the ropes, and after learning the ropes, quickly decided I could do it on my own, and did that jump about 4.5 years ago. Broke off my own and successfully grown a business to where we are today, and play in the residential first position space.
Yeah, cool. And so you work with a private equity group, and could you describe a little bit how that works? So just to get clarification, what you do is you fund contractors and developers, kind of just like what we do. You fund contractors and developers that are looking for shorter term capital for renovation or new construction of non-owner occupied and commercial buildings. Would that be right?
Yeah, that's an accurate picture of what we do. So our primary focus is, exactly what you said, financing non-owner occupied investment grade properties for real estate investors in 8 different markets throughout the United States. I was fortunate enough to meet my current business partner, Oliver, about now 24 months ago. And then this past fall in 2016, after him and I merged companies, we merged again with a private equity firm. So we're institutionally backed by a private equity firm, which is a dream come true because we now have what I refer to as a sugar daddy.
Yeah, that's good. Lots of capital behind you. Now, you and I have worked on projects together, and we actually have a project going in San Diego right now that we're teaming up on. So one of the things that we always really encourage is a lot of on this show is collaboration and working together, the abundance mindset. So I think this is a great example of where we do basically a lot of the same things, but we find ways where we can definitely work together. And by working together, collaborating, pulling your resources, our resources, we can really do some pretty amazing projects. And I'm really excited about a couple of projects where you and I went to, we didn't actually go to the visit together. I went to them after I met with you and your partner, but I think there are going to be some really nice projects. And so with what you're doing, the private equity group, now, Sugar Daddy, yeah, that's pretty cool. I mean, that's great. What could you just describe what that relationship is, or how that works with them bringing the capital in, but you being the group that places the capital?
So that's a great question, Tom, about the private equity firm and how that relationship, what it looks like now and how we got to it. It comes off of what you're saying about collaborating with the right people. I was fortunate enough to meet the CEO of Braegelmann Capital Partners, Travis King, a few years ago. I just kept in touch with him and built a good relationship as a friend and as a mentor. And Oliver and I were going to raise a fund together. And then I went to him as hey, I need your insight on our pitch, and more than anything, just looking for feedback. And he quickly said, hey, you guys have a great business model. Why don't you come back and pitch to my CIO and CFO? We did, and fast track, we ended up closing the deal with them. But the great thing about the partnership is we have 3 buckets of money that we have allocated to the partnership. One, they are invested in our company, so they are true partners and owners in our company, which fully aligns us. And they gave us working capital to grow the company, as well as capital to invest into our technology platform that we're actively building out. And then the third is, of course, lending capital. So having the capability of funding basically an unlimited amount of deal flow. It gives us, well-rounded capital stack to grow this business successfully.
Yeah, and the reason you were able to get to that point is you had a great track record. You had the history, and were able to get to that point where that group really understood how your business operates, what you do, what your track record is, your success, and all of that. So I think that's really great that you've been able to get to that point. So congratulations. Now,
Thank you.
if our listeners are, let's say somebody has that perfect project, they really like the project that they have and they're bringing it to you. Let's start with that, and then we'll go to the other part of your business, which is sort of the white labeling that you and I've talked about. But if an investor comes to you, an active investor who has a great deal, a great project, how do you like them to present their deals to you? What is the process they go through? What are some key things that you look for in that first pass?
Yeah, for sure. So I still think that, everybody in the industry right now in the mortgage industry is actively pushing, online submissions of loans and doing everything online. And we're in that same boat as well. However, I still think that, people are looking for what I refer to as the gut check on a deal. So I always encourage borrowers to, call us. And let's take 5 to 8 minute conversation. Let's talk about the deal. Let's do a gut check, because I'd rather, tell you a quick no than drag on a no for 2-3 days. And, the gut check, if we believe it's going to fit and meet our box, the next step in that process is, go onto our website and submit the loan there. And then within 24 hours of submitting online, we'll give you an official approval on the loan. But I truly believe that the gut check, a verbal conversation will, within reason, eliminate a waste of time on both sides of the table.
Yeah, I understand that for sure. It's getting through the projects quick enough to know that they either are possibly deals or no deal, and being able to do that face on a phone call certainly can be beneficial. Now, you also have the other part of the business, which would it be correct in saying it's more of a wholesale type of a model, where you're working with the white label piece of it? Could you describe that?
Yeah, definitely. So we are actively have and pursuing relationship with mortgage brokers who are looking to have access to our capital. And with qualified brokers, what we will do is offer our capital to them at wholesale rates. That benefits, the relationship for some obvious reasons. And at that point, if a qualified mortgage broker gets in our system, we'll wholesale the capital to them, and at the end of the day, be able to finance all their deals. And then there's that's what we call an origination partner. And then there's one step higher than an origination partner is we have a correspondent partnership. And within the correspondent partnership, we're still wholesaling our capital. However, we're providing a warehouse line to that mortgage broker, and then therefore financing the loans underneath their name, and then taking the loan off the warehouse line. That's going to be a very more in-depth qualification process for those mortgage brokers, but we are currently entertaining and have partnerships throughout the country where people are bringing us deal flow in that manner.
Nice. Now, in the area where a developer comes directly to you, are you just in California? Are you in a couple other states? Where do you do your business mostly?
Yeah, we're actually active in 8 states right now. We are in Washington, California, Arizona, Colorado, Texas, Massachusetts, and Florida, and we're just opening up Illinois.
Oh, okay. Very cool. If you had one thing that you wish that borrowers or developers would know or would do when they bring a property or a project to you, what comes to mind? Is it maybe the details that they bring, or what would that be?
Yeah, for sure. So I think it segues back into the initial gut check conversation I like having with people, or I tell our account executives to have. The few basic information we need is the property address, so we can quickly just do a quick comp analysis while we're on the phone. What are you buying it for? What's the rehab amount? And what do you think the projected ARV is? And then the last piece of the puzzle is just a quick, 2 to 4 sentence narrative of what you're doing to the property. Are you adding square footage? Are you, adding a pool? Just give us a quick sense of what that end product is going to look like. Those are the basics information from a deal perspective. The other couple pieces of information is the experience of the borrower, approximate credit, and approximate liquidity. We look at those 3 things from a borrower perspective, just because we're able to what we call do a pricing based on the risk, and that risk is based on those 3 factors. So we can get down our interest rates pretty low for experienced, good credit, liquid borrowers out in the marketplace.
Gotcha. Okay, when you got started in the business, what would you say was one of your biggest roadblocks, or something that
Whew.
you wish you had known before you got involved?
Yeah, the biggest roadblock in the business was just being able to understand and being in the seat of a real estate investor. I didn't
Hmm.
understand looking through their lens what they wanted and needed. So I've now since then I've played on both sides of the rope. I've actively invested in everything from apartment complex to ground up development deals and been principal in all the transactions. So that has set me apart to be able to understand from the borrower perspective, what do they really want? What do they look for? And so it allows me to, not only understand their perspective, but also give them positive feedback on their deals and really analyze it from their perspective. Because I've honestly told borrowers, don't do that deal, and these are the reasons why. And I've had borrowers thank me and say, you know what, George, that's something I didn't think of. I'm not going to do that deal. And I don't want to bet on a loser. I'd rather bet on a winner. And if the borrower is going to insist on doing the deal, well, you're going to have to find a different lender to work with because I don't want to be the bad guy.
Yeah, yeah. Well, just working with you on these last couple of projects, the other thing that I think that you bring to the table is the ability to be flexible and bring potential solutions to a developer or borrower who may have a project that they think is really good, but there might be some things that need adjusting on it. And so having that sort of background of having been a contractor developer yourself or a borrower yourself, you end up coming from a different perspective, or a better, a more, probably a more thorough perspective by having been in those shoes. And so that can create some solutions that otherwise the deal may never have gotten funded without those creative solutions.
Yeah, yes, 100%. And it even happens post-close loan too, where we've had borrowers get themselves in situations with general contractors and I've advised them on what to do, or they're facing maturity risk because they couldn't get permits. And I always try to position ourselves as a financial advisor than a lender, and the fact that, hey,
Mm-hmm.
yeah, we want to make the loan, but, we also bring more value to the table, and the fact that we've dug our own ditches before. So when you
Mm-hmm.
get stuck digging that ditch, let us know. We're a resource to help you get through it. We're really truly try to be a partner with our borrowers.
Nice. Okay. Now, if you looking 3 years down the road, 3 to 5 years, let's say, what do you envision for yourself, for your company? Where would you like to be at that down the road?
Yes, that's a great question. 3 to 5 years from now, I would love to have a very successful, thriving lending business. Where would be in 15 to 16 markets throughout the United States, and be known in the industry as the lenders who are not just there to make money and move on, but the guys are be known as the guys to help you to vet out deals, the guys help you find deals, and after we fund the loan, to be a resource to them if they ever get stuck, and that we are a true financial advisor / partner and not just a lender. That's where I'd love to be, looked at in the marketplace.
And that way you can also maybe get to the point where you can get out and do more surfing, right?
Yes, a lot more surfing would be nice.
Yeah, yeah. So it's this whole business that sometimes we get caught up in the business aspects of life. Life really is a lot more business than free time or family time. And so uh, definitely something that I really aim for is more time with my kids and things like that. And I'm sure that's the case for you too. How many kids do you have?
My wife and I don't have any kids yet, but we're on the, let's say, trying
Ah,
path.
okay, good. Well, cool. Well, good luck on that. And how about, let's get back to the developer, the borrower. What
Yes.
I'd really like to do is to give ideas or thoughts about what could make it more likely that they're going to get their deal funded. What advice could you give them, especially since you've been in their shoes in the past? past? Maybe whether it's around finding deals, whether it's around the way they're brought in, the way they're structured, anything that you can share on that that could be of value?
Yes, yeah, that's actually a really good question. The first thing, a handful of things to toss out there for people to improve their chances to be successful in this business is one, get yourself a mentor. No matter how experienced or non-experienced you are in this game, get yourself a mentor and learn as much as you can from one or several mentors. The second thing is, if you're lucky and fortunate enough to find a business partner that you guys have the same values and same work ethic, get yourself that person, because it's the quickest way you can duplicate yourself. And that's always, you're gonna be able to do twice to three times as more as a partnership. As a rehab flipper or a developer, you are very highly dependent on your general contractor. So make sure you properly select your general contractor, because if he screws up, I don't care how good the deal is, it will kill your deal. Another piece of advice is make sure that you have the right capital partners with you. A good first position lender who's going to treat you right, and a good, if you have an equity/gap investor like yourself, Tom, that, you guys have the same business and philosophies and you guys are in line there, because everything's nice and pretty when the deal gets done, but when there's a bump in the road, that's when the relationship's going to get tested. Absolutely. And then I think the last piece I would advise people to do is that, never, ever, ever give up. And, days are going to be a pain in the ass, but those are the days where you just got to wake up and dig in 10 times harder and work 10 times harder, and everything will shake out. So never, ever, ever, ever give up.
Yeah. Great. Great advice. Thank you, George. Now, so what about books or resources? Anything that comes to mind there? Do you have any favorite resources or books that you rely on?
Yeah, one of my favorite books is Good to Great. I love that book. I advise everybody to read that. Also a book, E-Myths is another great book. Those two are phenomenal books, give you some good business basics and on how to do things. Let's see here. Those are probably my two favorite books that I've read in the last few years.
Okay. Okay, great. Anything else that you'd like to share just about your business? Anything that you might be able to shed some light on for any of our listeners?
Yeah, let's see here. For the listeners out there, sure most of you are real estate investors in the rehab or buy and hold space, or possibly even the development space. My best advice is that we all know that the market is strong right now. We've had some really good growth. We're seeing pockets in some micro markets where it's getting pretty heated. My best advice to you is that do not start doing deals with the anticipation of appreciation. Do underwrite deals with the anticipation of flatlining, and also the fact that base your underwrite with double the time, just because we just see things in the marketplace that things are taking longer from a build perspective because subcontractors are busy, so they're not able to get out to your jobs in enough time, and you're going to have gaps between trades. And we also see houses sitting on the market a little bit longer. So again, double the duration of what you think it is and underwrite to a flat line, maybe even a slight depreciation. I really bothers me when people base an ARV on with appreciation in it. Don't bank on that, because it's just, if it happens, that's your frosting on the cake. That would be my advice to people out there.
Yeah, that's great. Thank you. Now, if anybody would like to reach out to you, and if people are out there, if they have deals that they'd like to take, that they'd like to bring to you, or let's say it's an investor who might want to invest with you, how would they reach you, or what's the process for getting a hold of you?
Yeah. The best way to get a hold of me would be via email. Email is goflint@triumph.capital. That's GO, F as in Frank, LI, N as in Nancy, T as in Tom, @triumph.capital. Email me anytime about anything. I mean, even if it's, hey, George, I just want to get to know you and want to talk for a few minutes, awesome. Or if you have a deal for us to look at, great. And then answering your question about, investors who might want to invest in on notes with us. That's not our typical MO. However,
Mm-hmm.
if an investor wanted to purchase some of our notes, we would entertain that on a case-by-case basis. But yeah, again, feel free to contact me anytime about anything. Here to make friends and do business.
Excellent, excellent. And we'll be sure to have your contact information in the show notes. So if anyone's driving and listening to this, don't worry about taking it down right now. It'll be in the show notes. So, and if you, just for the listeners and viewers, if you like what you're hearing, if you like this podcast, let us know. If you have topics that you'd like us to cover, let us know. This is really a very collaborative approach where we want to be able to share a lot of value, a lot of content where it helps you grow your business. And so would love it if you could maybe go to iTunes or Stitcher or SoundCloud, and you can subscribe to the Bang Free Blueprint there. But even more so than that would be if you contact us and let us know if there's anything that you have questions on, any topics that you'd like us to cover. Really want to be there to be a good resource for you. And that'll be in the show notes as well, but it's tom@tombraegelmann.com is a good way to reach me. And George, I really appreciate you taking the time with this interview. And I think you've got a great product. I know you and I have done some pretty cool deals together, and I definitely intend to continue with that. So, and I hope that you have a chance to get out and surf a bit more than you have lately. So again, thank you very much for joining me on the call, and appreciate it.
Yeah, thank you, Tom, for the opportunity. Really appreciate everything we've done over the last few years, and we'll have a good rest of your week.
All right, thank you.
All right, Tom, take care, man.